Well, we are back, my friends, and interest rates are going up once again. Yesterday was a really big day as the decision moved markets as well. Joining our conversation this morning is a local financial advisor, Bruce Allen of Bruce G Investments. Bruce, thanks for being with us.
Good to see you.
So the Federal Reserve, they raised these interest rates yesterday. What exactly happened here to make them do this?
So they raised interest rates by 1/4%. The first thing is that the rate with which they're raising interest rates has come down. As you may remember, they raised rates 4 times at 0.75% or 75 basis points over the summer and early fall, and then they raised rates another 0.5% in December. So rates went up by 0.25%. The short-term rates, measured by what we look at is called Fed funds, that's now at between 4.5% and 4.75%. That's up from a little over 0 a year ago. So we've seen these rates go up very rapidly and very quickly.
So Jerome Powell is the head of the Federal Reserve, and he had a press conference yesterday. What exactly did he say about the state of inflation as well as our economy?
He said a couple things that made the markets very happy, first off, but we'll get to that in a second. The first thing he said was that the rate of inflation is coming down, and he actually mentioned disinflation several times, which we haven't heard him say that before. So we've seen that he has confirmed that the work that the Federal Reserve has done to try and bring inflation back down is starting to take effect. And the markets were really happy about that. Number two, he said that the economy, it's also slowing down. And lastly is that the labor market still remains very strong. And he's watching that because the labor market may be the source of all the inflation we're seeing right now, or at least a significant portion of it.
So we keep talking about these markets, and as we mentioned a little bit earlier, the markets did in fact react to this move yesterday. My question to you is, how did they react?
The big thing what's interesting was the Dow Jones Industrial Average, before he started speaking, was actually down 450 points. When he got done speaking, it had rallied all the way up from where it was down and actually was in the positive territory. The bigger impact, and this is what sometimes is a little bit not intuitive to people, is that longer term interest rates actually fell by about 10 basis points. The 10-year Treasury bond was trading about 3.5%, finished the day at around 3.4%, is actually around 3.36%. And if you're looking for a new mortgage or some of those things like that, that are priced off of that long-term interest rate, those interest rates actually went down yesterday. So we're seeing sort of a
little bit of a flip-flop.
Teeter-totter.
Okay.
I think that's what those are called.
A teeter-totter. that is in fact what that's what I'm here
rising,
for.
Long rates coming down.
You're here to fill us in on the economy. I'm here to fill you in. It is in fact a teeter-totter. What can we expect next as we move forward?
It's really the key question. What Wall Street's really looking at is this the last interest rate rise, or are we going to have several more? The market is thinking, and they're guessing that in March, the Federal Reserve will raise rates by another 1/4 percentage point, and that may be the end of it, Jordan.
Okay.
And at that point, if they're done with interest rates rising, the market's already celebrating in advance. That may be a bit premature. We'll see.
You're smirking when you say that.
I'm not smirking. I'm cautiously optimistic.
Okay.
I want to be cautiously optimistic. But I do sometimes think that the market gets a little bit ahead of itself.
Sure.
So we'll have to see whether that's accurate or not. But I would never smirk at the market, never.
Okay, good lesson from Bruce right there. Bruce, thank you very much for being with us. Good to see you as well.